Well, you know what I'm saying? The conversation I want to have with you today is about survival. You know what I'm saying? Ways that, our people, when they're looking for extra income or they're looking for extra investments, some of the things that they can do. And this is the reason why I'm so glad that I'm having this conversation with you, Kevin, is because, this conversation that we're having now, I wish I would have had this conversation with my parents when I was a little bit younger. I wish, this conversation that we're having now was available and the information was available to me, because if I would have been able to capitalize on this information, 10 years ago, that could have potentially helped me and my family out based on some of the decisions I would have made if I had this information. And the reason I say that is because right now, you see the thing with the cryptocurrency and how, and like I told you before I did start the video, is that I want to talk to you about your opinion on this last thing that happened with GameStop, to kind of get your opinion about that. But the fact that, not just, with GameStop, but just with Bitcoin itself, a lot of people have, reaped some benefits from investing in to Bitcoin 10 years ago, and had I been in that position, I could have been able to be in a good space right now. Actually, like I said, I know people, literally know people that have benefited from this, that's telling me their story. And I'm just like, man, it's crazy. I wish I had this information. So today, I like to kind of have this conversation, to talk to, because we, like I said, the last video we did, if you guys haven't seen the video, you guys definitely can check the video out. We was talking about this before it got to where it is now. And like I said before, we're here now. And, I think it's very good for people to have an understanding about this information. You know what I'm saying? So
yeah, for sure. For sure, man. Last time you and I had a conversation, I want to say Bitcoin was probably below 10,000, probably at 7,000. It was like last year.
Yeah.
And we're talking about what are cryptocurrencies. And today's episode is actually what are cryptocurrencies part 2. So we're going to go into a little bit more detail on exactly what are cryptocurrencies, how can you find out where these cryptocurrencies are trading at. So I'm going to show an exchange. I'm probably going to go into one of my wallets, a cryptocurrency wallet. It's called Exodus. I actually like that wallet. I have multiple wallets, but this is one that I feel comfortable with showing. I have no money in there. I've transferred everything out. So this will be really good just to see. I'm not the type of person that want to be showing things like that.
Right.
People can add, people can add, be like, hold on, back in 2021, he had this amount. So that means he's worth this amount. I'm not trying to do that. I'm just trying to show people the functionality of this. If I had a portfolio that I could show them, I would do that too on crypto exchange, but not on crypto exchange, but on the stock exchange. But all my portfolios, I can't just like transfer, that out, but just for this episode.
Right.
So, yeah, so we're gonna do that. Less.
Yeah, but now, real quick though, for those that don't understand what a wallet is, what is a wallet? Like, what is a wallet? What is that?
Right. So on my channel, this is actually the All Weather Lifestyle channel.
Right.
You guys can check that out. I will be sharing that. You can probably link that somehow. But a wallet is, I basically think of a crypto wallet as like a bank account where your cryptocurrencies basically stay. That's where they are. That's where you kind of keep them. And there are actually 2 different types of wallets. There are wallets that we call hot wallets. There are wallets that are online, like the one I'm going to show you today. And then there's another wallet called a cold storage wallet. And that one is offline. You hold the keys and, it's yours. Like if you lose the keys, you can't like call the Bitcoin CEO and like, hey, could y'all find my keys? No, there's no customer service. You're responsible. This is like the ultimate. You're responsible for your own actions here. If you lose it, nobody can recover those keys. But it also gives you the added benefit of nobody can take your money. Think about how many times people get their bank accounts frozen. Think about how many times you go out of state, just trying to visit family, and you swipe your card and it's like, hey, somebody's in Texas trying to steal your car, so they'll freeze your card for your protection. None of this happens when you have your own keys in a wallet. You can spend your money how you want, where you want, never getting locked out because you hold the keys.
That's dope. That's very dope. Yeah, so I definitely appreciate you sharing this information. Once again, family, thank y'all for tuning into the show. Don't forget to go over to Kevin Randall's YouTube page. Make sure y'all get on there and y'all watch these videos, family, and y'all become a member in All Weather Lifestyle. Y'all say it correct?
Yeah, that's the All Weather Lifestyle. And I want to just say the All Weather Lifestyle is like this. There's a portfolio out there in the stock market. It's called the All Weather Portfolio. And if the market's going up, down, left, sideways, this portfolio of stocks is actually beating the market, like pretty much in all conditions, like in all weathers. So I created the All Weather Lifestyle a YouTube channel as a way basically for people to be able to at least get the knowledge so they can possibly beat crypto, stock, or real estate markets in any conditions, up, down, sideways, whatever. So that's why it's called that. You should be prepared in all weathers. I feel like giving the information to people is what you need, but you have to apply that information. Like, right. I'm not going to say, hey, go buy this stock. This stock is going to go up 100%. That's not my job. My job is to at least deliver the information, and I expect people to take that knowledge and apply it. I mean, that's kind of my thesis on a channel.
Yeah, and the thing, is like I said, whenever you look at a lot of individuals who come from, like you say, the urban area, a lot of us are not privy to some of this information that you talk about, and like you say, this could be to our advantage, to be able to use this, and the benefits that come with it, that, like you say, is money security, is you're securing your money, when you got these wallets and stuff, versus somebody else having access to your money whenever they choose to have access at your money. And like I said, that's why I'm glad you're doing this video for us today. And once again, family, you guys are in for a treat, you know what I'm saying? So, I definitely appreciate, you doing the video for us today, my brother,
Yeah, I'm glad to be doing this. And, some of this information that I may be given, I'm gonna try to make this information where pretty much if you just now getting into the stock market or crypto, I'm gonna try to make this information like, they'd be like, oh yeah, I can understand this. Now, if somebody does not understand this because they may not have like a base knowledge of just, hey, what is a platform? What is investing? Then I would like people to ask questions. Maybe me and you can get some ideas to formulate, and we can create another video on that.
Right.
A later date. So I'm willing to do that.
I'm definitely down.
Additional questions.
I'm definitely down for that. And like I said, if you guys have any questions, definitely put your questions in down at the bottom where the comment section is. And like I say, let's have a dialogue about this. And and we'll definitely keep the videos coming. That way we can educate the people. That way you guys aren't left behind whenever this is in full effect. It's just good to have this information, family. That way you can pretty much take care of you, yourself, and your family. And that's one of the biggest problems that people face is economic problems and stuff. Dealing with money. And so that's why this information is very important. So yeah.
Right. I totally agree.
Right. Now, do you want to show us something, or?
Well, I mean,
you don't have to. I can start asking you some of my questions that I got, my brother. You know what I'm saying?
Yeah. Ask me some of the questions.
Yeah, I got like I said,
go on off into,
because once again,
what I need to show.
Right. Okay, cool. Well, like I said, I don't know if you had something that you want to show, but like I said, with this last thing, I want to kind of get your opinion on this last thing that happened with the GameStop. Like, what is your opinion about the GameStop episode? Like, do you have any thoughts about that?
I mean, my thoughts on GameStop, or people are calling it GameStonk because Elon Musk, he tweeted out GameStonk because he can't technically interfere with stocks because the SEC, the
Right.
Securities and Exchange Commission, they're all over him. But GameStop, the thing about GameStop is, I think what the Redditor guys did, which actually made me a Redditor. I actually got an account on Reddit now, crazy. But I think what they did was amazing. So we're talking about these guys, these hedge funds. These are like people who have a lot of money. They put money in these accounts. Wealthy people, they put money in these accounts, and these investors who are hedge fund managers, they say, hey, I'm going to take your money and I'm going to get you this amount a year, 20%, 30%, 40%, whatever the fund said they're going to get. So these wealthy people are expecting these hedge fund managers to make them that money year over year. So these hedge fund managers, what they do is they use tactics like shorting stock, or they may use options or whatever different type of tactics they have. In this case, they shorted this stock called GameStop because it looked like it was going out of business. Think about it. Pandemic, everybody's streaming. This thing is like Blockbuster. You got to go there, pick up games, things like that. So it looked like an easy victory. It looked like a W for them. Well, they shorted it, and these basically retail investors or just regular people who hold Robinhood accounts, they were like, no, we're not going to let you take this thing down, because if you short it, that means you are basically selling the stock at a height up here, and then you buy back the shares at a lower height. So it's kind of different from buying here and then selling as it goes high, right? So we all want to buy stock and then we sell high. Well, these guys, they sell high and then they buy back low. So what these guys decided to do is they said, well, we're going to basically do a short squeeze, because eventually if the stock, let's say if the stock's at $10 and you shorted it thinking it was going to go to zero, which means the company goes bankrupt, then you get that 100% gain. From 10 to 0, that's 100% gain from you, right? Or from 10 to 1, that's a 90% gain for the hedge funds. But these people said, basically, we're going to basically force them to do a short squeeze. So if the stock goes from $10 to, let's say, 100, that means they lost, the hedge funds would have lost 100%, right, on their initial investment.
Yeah.
So you can lose infinite amount of monies by shorting, because then if it goes from, let's say, 10 to 200, that means they've lost 200% of their initial investment.
Right.
While the people who, like GameStop people, they're actually making 200% money as the stock goes up. So that's what they call a short squeeze, because to get out of a short that you have, you literally have to buy the stock back. So that means they have to buy it back at a higher price. So these guys were like losing, I think I seen up to one estimate, $75 billion, the hedge funds.
That's crazy.
One lost $17 billion in like 2 days.
That's
because
crazy.
These guys, that's crazy, right?
Right. But what I thought was crazy about the story was the fact that, people was making money off of that, you know what I'm saying? And so people that and I understand, this is, and that's, one of the things I also want to talk to you about. I want you to talk about as well too, is the dangers of, because I seen a story about a little kid, the 20-year-old guy who thought he was, he lost, I guess, like over like $200,000 or something like that. And he committed suicide. Did you hear about that story? About the 20-year-old
was
kid?
He a hedge fund, or was he one of the guys?
Oh, he was one of the kids that lost. He thought he lost money over this whole GameStop thing, and he ended up committing suicide because he thought he lost money. So I was going to ask you to talk about the dangers of the fact that like the dangers of being in the stock market and are playing with the stock, how you can also lose money. Because like I say, I know that, people would like to kind of, get this information and then start, investing into stocks and stuff, but they should understand that, there's going to be a danger. Like, is there a danger to it? Pretty much like if you start playing around with the stock, like what is the dangers of playing around with the stocks, the stock market?
Well, all investments have a risk. And I always tell people that the number one thing you are as an investor, you are a risk manager. You're a risk manager. So let's say if your light bill house bill, car bill is due, you don't use that money to invest. You're using money that is going to be, I would say, your extra money, your disposable income, money that basically, you probably would go out to eat with, or you may go use leisure time with, things that you're not going to necessarily miss. If your stock goes from whatever you bought it to zero, you lose all your money, you're still able to basically take care of yourself and your family. So yeah, the risk of investing in the stock market is simply like what you said. You can lose all your money, especially if you're into the wrong things.
Right.
So you use money that's just going to be extra money. And I have a rule: 10% of your monthly income probably should be going into some type of investment account, something like that. I'm not talking about trading, all this game stock stuff, but we're talking about just like an investment account, S&P 500, things like that.
How does one get involved into investing like that? Like, let's say I'm at the house and I got my cell phone and I say, okay, I want to start investing in stuff like that. Like, what is the steps that someone would take to start investing in stuff like that? Like, what are the steps? Like, what is the first step that you would recommend for someone that will kind of start want to make investments into themselves or their children? Like, what is the first step that you would kind of recommend for them to take?
Right. So there are multiple First, you got to find a platform. So what I'm going to do is I'm actually going to share my screen right here.
All right.
Let me see. We call this right here Robinhood. And basically what this does is this right here is this is a platform that people can use to literally invest in right now. So you can go right up here. You can sign up for Robinhood today. I know a lot of people are leaving a platform, things like that, but this is just a basic, how do you get into investment? So you can sign up for Robinhood right here. And once you sign up, you have to do a thing called KYC, which is know your customer. So they're going to ask you for like some personal information. Probably, I've done this like 7-8 years ago. So I think it's like maybe a photo ID, front and back, like license or something like that, social security card, things like that. You have to link your bank account or your funding source, whatever you're going to use. And then you're able to literally go in there and just start buying stock. So this is one of their pages. If you guys wanted to, it's Robinhood.com. You can kind of check some things out. I actually make a lot of videos off of this right here. So that's how you set up the platform, right? And so that right there is how you'll be able to get directly into stocks. You can do that literally today. Like you can do that at all hours. You can say, hey, I'm going to set up me an investment account. It takes $0 to actually fund it. You don't have to even send $1 over there. You can just, I'm going to set this up for a later date whenever I get my income tax or whenever I get paid or whenever I get whatever. You want to set that up. You want to get some money in there. I would say, you can start out with like literally like $10, $5. You can start out with whatever you want to start investing. Every bit counts. Every bit counts.
Yes, that's a good deal. I definitely appreciate you showing the people that, because that was actually going to be one of my questions is understanding what a platform is, because you hear a lot of people talk about platforms and trading on different platforms. And, for some people to be able to know how to get started, to be able to go to a platform and to, like I say, go and, get started. And of course, doing the research, that's needed. So I definitely appreciate you showing that.
Yeah, I'll actually, I can actually go into like, how do you find stocks to invest into if you want me to, or if you already have, questions or something about that later, I can get into that a little bit.
Oh, no, you definitely, like say, hey, we learning here, you know what I'm saying? Definitely, if you got something to show, you know what I'm saying? We ready to eat, you know what I'm saying? We came to eat.
Okay, so when it comes to the different types of things to invest in, this is the platform that I use. It's called FinViz, right? So let's say if you go to your Robinhood account, you're saying, well, I'm trying to find something to actually invest in. What do I invest in? I've told people to invest in the S&P 500, right? Let's see. So the ticker symbol is basically an abbreviation that we use in the stock market, but the ticker symbol is SPY. You can look it up. You can look up any stock you want to. If you wanted to look up Apple, if you wanted to look up anything to see if it's a publicly traded company. This right here, the S&P 500, is actually a basket of different stocks. It is 500 different stocks, basically the top 500 Fortune 500 companies in the United States that are public. They're all in here. So when you buy this one stock, it's literally you're buying 500. The price of it right now is $390. Don't worry about that, because if you use fractional reserve, if you use the fractional system, you can actually buy fractional shares of this. You can buy $3 of this. You can buy $10 of this. You can buy $1 of this. It doesn't matter. So that's kind of how I do a lot of my research on these things. And if you look at what this thing has done over time, we're talking about this thing has went up massively from like $101 back in 2000 and let's say 10, whatever year this is. 2010 March, all the way to right now, it's almost at 400. So if you look at those gains, that's like almost like a 300% gain in a 10-year period. So if you would have had $1 million, that's how you make $3 million in like a 10-year period. Most people probably won't make $1 million, may make $1 million over their lifetime, but this is how people, by compounding your investments, compound interest, this is how people make $1 million a day, $1 million a year. It becomes nothing once you get into the compounding mode. And this vehicle right here, the S&P, if you got the money, this is going to compound it all day long.
Right.
So I personally, and I need to disclose this, I personally buy that right now. I've been buying that fund for the last 5 years. So, and it's just, compounding. So the annual rate of return right now, I think for me, is about 20%. That is crazy. That's nuts, because if you get 20% returns every 3.5 years, you double your money. So, I mean, you got to be thinking about this. So how do you preserve wealth? Well, you got to be able to compound faster than these guys are inflating it through money printing and a lot of different other tactics that they're using, like coin clipping, or basically making a king size candy bar a couple grams, and then next year is half that. That's basically coin clipping. That's inflation. I mean, we're getting up at every bit of the way. So you got to preserve your dollars buying power, and you do that through growing your investments.
Right.
That's how you reserve it.
And that's why I said earlier, that the fact that, had I had some of this information back then, I potentially can be in a good place with me and my family right now, dealing with economics, with investments and stuff. And I definitely understand, investments, and the return on your investments, simply with the fact of, with me, with my drumming that I do in Bricktown, invested, $400 inside on this drum, and this drum has brought, it brings me money, you know what I'm saying? And that's kind of like with your investments, when you know that it can be good for you, you invest in it, and so, like I said, I'm glad you had this conversation with us, man, and this is good for the people to understand, especially the fact now that things are starting to change now, dealing with the dollar, like everything is actually going over to the online coins and stuff, or the online currency, shall I say. We're getting ready to go to that era to where everything's going to be, where you buy online. And so, you want to kind of get in practice of this while you can now, before it's kind of, they switch you over right away and you trying to, fumble and still trying to learn whenever you have the opportunity to learn now, as well as be making investments for the future, for you and your future generations. Because when you look back at, some of our ancestors, like my last generation, the generation before my parents, them, I'm sure they was making good investments and stuff. It's just somewhere down the line that information wasn't passed over, and but we're not the only ones, but you can look at other families or other individuals who have got that information, and you can see how it's been working for them, and like I always say, information is key when you navigating here inside this world, and information. I got somebody, just 1 second,
You got
I got
what?
somebody that's going to pop in, Mr. Rudy Segura.
Yes.
Yeah,
Hey, what's up? Hey, we're recording. How you doing?
what's going on, Mr. Rudy?
Oh, he's connecting his audio.
So, uh, Rudy also, like, he may have a couple questions for you as well too. I want to bring him in, because we've been talking about this, with the GameStop stuff that happened, and it was kind of like I say, a eye opener to a lot of people, and it also kind of just showed the fact why the reason for like a big the reason to keep people distracted from this information, because if everybody was practicing this information that you're talking about, everybody potentially can be putting themselves in a better position by making simple investments, planting the seed to come back 10 years down the line.
And you know what? Like right now, it's still a good time to get in. I'm going to tell people this probably to the day that I die. Like this is still a good time to get in because it is. And the fact of the matter is, when investing, I have a model: slow is smooth, and smooth is fast. What we're trying to pass down is not just like, hey, this is not just trying to pass down money, because passing down money to family members, it may not necessarily help the way it's going to help financially for that time being, but it's not going to help them preserve the wealth. Passing down a system with money. What if we pass down a system that said, hey, like you said about your drums, right? You're like, hey, this drum actually is making me money, right? So you spend $400 on that. What if you spent, hypothetically speaking, let's say if I owned a farm and I spent $500 on a cow. Now, think about this: the cow is my investment, or the stock market, right, is my investment. So the cow's my investment. And now for the next, I don't know, 3-4 months, I milk my cow and I sell the milk, not slaughtering the cow, not killing the principal, not selling your principal, right? So not slaughtering cow. And now my milk buys me another cow. Now I have 2 cows that I can milk to buy more cows, to buy more. What if we set that type of system, that type of thinking? Do not slaughter where your money's coming from. Do not slaughter the principal. Only live off the dividends or the milk, right? Same thing if you had an apple tree and you basically planted all these seeds to create more apple trees without ever chopping down a tree. Like, this is what we're talking about. We're talking about setting up a system, and you can pass this down for generations. This is called generational wealth.
Right.
It's the system. The knowledge is more important than anything else, and staying in the game is more important than anything else. That's why you can't get blown out. Like, basically I'm betting, whatever, on whatever.
Right. Look at this. He giving y'all this game. He giving y'all this knowledge. Once again, family, this is your boy Eddie H, aka Your Knowledge. I got Mr. Kevin Randall and Mr. Rudy Segura here. Don't forget, family, to go to the All Weather Lifestyle channel and make sure you subscribe. You got to become a subscriber so you can get this information, family. You got to get this information. This is, once again, this is going to be able to break generational chains that have been, having people in their family stuck in a situation, because now you got the information. Now, when you get the information, there's no excuse. So if you're getting this information, family, like I say, I definitely thank y'all for tuning in, and make sure y'all definitely subscribe to his channel. And thank y'all for tuning in, family. Back to you, Mr. Kevin Randall. Had to give you.
I was gonna say something like, what if you have maybe like, what if somebody had kids and they're like, well, we got $2 million in the bank. Why are we living like this? Why aren't we spending that money?
Yeah.
And that's how the generate, like, they want to spend the principal, right? That's equivalent to this parable right here, where we're saying, I have all these cows, which is my wealth or my investments, and then my kids tell me, I want to eat hamburgers. I got to slaughter that cow, right?
Right.
I got to basically cut into my principal. What if we said, well, if you want to actually, eat hamburgers, what you'll have to do is you have to go out here and basically milk. You have to basically raise enough capital to buy an asset that's going to get you enough cows that you can continually eat hamburgers without overall destroying our principal. Actually, it'll be growing our principal, because now we have more cows in the long run. You know what I'm saying? Something like that. So if you want to basically buy basically a liability or something like that, you're going to have to raise an asset that can help you buy the liability. And at the end of the day, we get to keep the asset, which grows the family's wealth. It'll be like a system similar to that. And I know I'm saying it very simple and very easy. And it's like, yeah, that makes sense. Yeah, just the kid can do that in 3 months of milking. He'll have enough money to buy his own cow to slaughter, and and then we'll have access meat to like sell off to probably even buy more cows or something like that. So, but I know it's not that simple, especially when you're dealing with multiple personalities and family members, and everybody's trying to figure out, no, I want to do it this way. No, I want to do it this way. And then you have people that may be like, well, I know how to make a quick buck. And that's when I come back to the fundamentals of slow is smooth, smooth is fast. Don't kill your principle. Okay, I'm done beating that dead horse.
That's dope. That's dope. So it's all about the principle. You got a question, Rudy?
I have a couple questions. So I've been listening. I don't know if you guys. So a couple questions for some people that are starting, like me. I just started. I think I started looking into this a couple of weeks ago, and for new beginners, what kind of apps are there out there to help somebody get into this? Like, what's the first thing they need to look for? What type of app they're trying to use on what platform? Do you have any information?
Yeah, I actually do. One of the apps that we've been using recently is going to be the Robinhood app. So you guys can show up with that. There's things like M1 Finance. There's other things like Webull. There's other things like E-Trade. There are multiple different apps, but this is just one that you can actually use on your phone fairly easy. You can trade, options, stocks, crypto, different things like that. But yeah, there are multiple platforms out here that I would say that you can use. I personally use Robinhood for mine, but yeah, there's like an unlimited amount that you can use.
So my next question, like a lot of us and like the gold rush, people are just rushing into this and they expect, I have $200 in the bank. As soon as I get home, I'm going to throw this in there immediately. Can you tell people the process it takes to even get on those platforms?
Right. Yeah. There actually is a process. So like you have to do a thing called KYC. So you're going to need to, like, if I wanted to sign up right now, it may take me, it may take me a day or two. It depends on how they have to verify, right? Like if they have to verify my driver license, it may take Robinhood or the platform a day or two to do that. Because they have to go through a process the federal government makes them know your customer, KYC. And so they're going to verify your social for tax purposes, obviously, because they're going to send you the form saying, hey, you owe these, this is what you've been trading, this is what you made, give this to the IRS whenever you file your taxes. But also they need to make sure that you are who you say you are, because there could be people out here acting like they're you making money and then you're getting taxed. So that's why they have to do the whole KYC thing. So yeah, it may take some time. I would say.
So you would need a driver's license or an ID, Social Security. Do you need a bank account or anything? So you can either, what do people need to understand in order to buy and sell? Do they need a bank account of some sort?
Oh yeah, right. I said it may take a day or two, but I've seen people do it a lot earlier than a day. Like I think like within 30, 40, 50 minutes. I guess it depends on the platform. But yeah, you're going to most definitely need a funding source. So with me, I'm part of the banked crew. I think like half the world doesn't have a bank account. So they may not necessarily be able to say, hey, I got a bank account, so how do I fund this? They may have to end up setting up one. But if somebody in the comments know of that you can get onto like Robinhood without setting up an account, please let us know, because I could be wrong. But for me, I'll tell you what I did. I had a bank account. I just tied my bank account to my Robinhood account. So that's how I can get the funds from, let's say, my job sending me direct deposit, and that goes directly to, let's say, Robinhood, so I can invest. So that's how that goes for me. And I think that's how it goes for most people.
So would you say it's safe to say if anybody's even thinking about getting on to either crypto or stocks that instead of waiting to the day they decide to, they should go ahead and start walking this out and being ready, because it does take a process. I thought I was able to get on there immediately, and then they asked me for my driver's license, and of course I said no, I don't know who you are. How you gonna want my driver's license front and back? And then so once I got over that, I think it took me a day to get over that. Then they asked me for my social security, and I backtracked.
You were
another
like,
day.
I'm done with this.
I was like, what's going on over here?
I know it's scary. Like, that's why I think me and you were actually talking on Messenger the other day, and I was like, hey, you can actually trust these people on Robinhood when it comes to like your information, because the reason I said that, because I knew they were gonna ask you for that, and that's scary, especially this day and age. You're like, hold on, my social, what are you talking about? But it's for the government purposes though.
So then it's a good idea to start getting that out there if you're even thinking about it. Another thing, what do you recommend people doing with their passwords? Because some of these platforms, they will lock you out, and it's just a longer process. What do you recommend people to do, maybe?
For me, I write down the password and I put it like in a safe spot, just in case I lose my phone and I don't have the whole face ID, or I can't put in my password. I write that down in a safe spot that's not like, just not like just in the open, because I don't want somebody to be able to have access to that. But I do recommend people write that down, because you don't want your funds locked in there. I think technically, if you lost your password, you probably can call customer service and be like, this is who I am. You can verify because you're already KYC, right? Like, they got your ID. Like, you can be like, this is me. You'll be able to get that back only on the stock market. We're not talking about the whole crypto wallet. You lost your keys. And so, yeah, on the stock market, you'll be able to most definitely get back on some way, somehow.
Awesome. Thank you for that.
Now, there people talk about mining and stuff. Can you explain to people what mining is? What is mining? Mining coin.
So yeah, I have a cousin. He used to actually mine Bitcoin. He had 30 million Satoshis. He's still my cousin, obviously. I talk like he's not my cousin. But he had 30 million Satoshis. It was crazy. And think about Satoshis. There's 100 million Satoshis. There's a thing called Satoshis. 100 million of those make up one Bitcoin. So if you want to get a full Bitcoin, you got to get 100 million Satoshis. So he had 30 million of those. And that's basically a third of a full Bitcoin. That's crazy if you ask me. It's almost a third. It's a 30th. But what you have to do is you have to like set up these miners, and you have to set up like making sure that they have enough air, making sure they're not overheating. It is, I would say this, it's profitable if you're able to do it over a long period of time, because like I said, he had 30 million Satoshis. Let's say when Bitcoin finally hits 100 million, those 30 million Satoshis will be worth $30,000. I think he spent maybe 3,000 on the equipment. So long-term, it'll be profitable, but every month, whenever he was first mining, he was actually losing money because of his electricity bill was actually going up. So he was technically losing money when he was mining, but over the long term, and as Bitcoin goes up, or whatever crypto you're mining goes up, it should all basically pay for itself in the long run. But I'm not that technical. I don't know that much about mining, but it is possible to do it.
So I got a question for you real quick though, talking about coins. Is there a specific coin that you are investing in right now, or that you think is maybe the next big thing that, people should kind of pay attention to? Do you have a specific coin?
Say again?
I said, do you have like a specific coin that you have been investing in lately, or that you think may have opportunity to kind of, make something happen?
Yeah, I'll tell you right now, there are 8,000 coins, and I'm gonna give y'all the keys to the kingdom right here, okay? 8,000 coins. Out of those 8,000 coins, one of those coins is gonna go to the moon. Now, I can't tell you exactly which one, but just know that one of them's gonna go to
I was gonna tell the people.
one of them will be.
I was gonna tell the people to thank you again. I don't know if people want to thank you for that. That was,
Yeah, hey, just search through the 8,000. Let us know when you find out. No,
That's right. And if I could add, and you can help me out with this, one of the reasons the stock market and even cryptocurrency is such a big movement right now is because of the social media platform. Before hedge funds would be able to get to these things called dinners, right? I guess that's the dinners, and they would say, "Hey, I'm going to buy a million stock," and they drive it up. And now, because of social media, you got Instagram, Twitter, Facebook. People are getting on here and saying, "Hey, guys, let's come together, and we're going to do this." It's just the game's changed. Now we, the people, actually are having a bigger hand in this than what they wanted us to. Can you kind of explain what's going on with that?
Yeah, for sure. Like, I think that at the end of the day, money moves the market. So if a hedge fund at their dispense has $10 billion, like, because they have their investors money, they may have funds under management of 10 billion, and they're able to move and shake the market. But if you get millions of people together, all focused on a single goal, we may have 100 billion. So we're going to always be able to crush people once we unite. So yeah, I think that with these groups like Reddit, Twitter, crypto Twitter, stock market Twitter, all these groups coming together and putting the money in, technically we do have more money than the rich when we're all teaming up. That's
right.
That's just like democracy right there. That's just like democracy, If we just come together, we can actually make some things happen.
Yeah.
And that's awesome. That's awesome. Like I said, people should be really excited. I'm actually trying to get with Eddie, and we're going to talk to some younger family members that are excited just as much as we are, because we're new to it. Thank you again for everything, all the information you're giving us. I mean, you give us a push, the motivation that this can happen, and we're trying to pass this motivation on to the younger generations. I wish somebody was telling me, for instance, the information that's on the internet now, if we had it at our dispensary, at our disposal, we would blow up. So I have a guy I follow, and he says, it's a time where every information is at our fingertip, all the knowledge, but yet we don't know how to use that knowledge. So it's a time to use the knowledge to our best ability. And we're out here, and we need to come together, teach our youngs. We might be millionaires in 10 years. And if they're 15, 17, we will be millionaires. I'll put it out there like that, speak it in existence.
Yep.
But if they're 15 and 10 years for them, they invest, you never know. They might invest in the next company and be a millionaire by 25 earlier.
Literally, they have the younger generation. Let's go, because we're all millennials right here. So the younger generation, the Gen Z, those students, the people that are coming like out of high school, right, younger 20s, they most definitely have an advantage over us because of all the information they have. If I had that information at 20, I mean, dude, and if I was as knowledgeable as I am now in the stock market, I'll be killing the game. But the thing about the youth, somebody said this, youth is wasted on the young.
Yeah.
Youth is wasted on the young because all that time they have, dude, by the time they're our age, they would be at a place in their life where they are financially free. They're probably being philanthropists, open up certain things for underage youth or youth that are disadvantaged. Any of those things, they probably be opening that up. But you're absolutely right when it comes to that. They have a technological advantage when it comes to all this connectivity of the web. And I just hope and pray that they use it in a way that is going to benefit them and their families long term.
I'm excited.
Right, and that's why. I know you go ahead, Rudy.
No, go right ahead.
No, I was gonna say that you're right, and that's why I say that for us to be able to kind of give this information to families to get to their young ones, or for families to take heed to this information now, so that in the future you can look back and say, I'm glad that I invested this money in this or that, because it kind of gave me a benefit by investing versus, you know, like you say, the asset versus the liability. You know what I'm saying? You versing in these assets and something, and you can look back 10 years down the road and say, I'm glad that I did that, versus just constantly spending my money on certain things that's just gonna waste away, you know, that's not gonna be here 10 years down the line, you know, 2 years down the line at that. So
And another thing that I think people that we gotta see, we gotta go down, like when we're talking to people that may not know a lot about investing, I think we gotta go down to the microscopic level. Like to the microscopic level, they may be like, well, my Jordans are an asset. My chain is an asset. My polo shirt is an asset. See, if we get on the same, if we're speaking the same language and we say, hey, these are what assets are. Assets are anything that put money in your pocket. A liability is anything that takes money out your pocket, like every single month. So you'd be like, okay, so I thought my Jordans was an asset. That's not putting money in my pocket. So now we're trying to figure out, so what is an asset? Oh, okay, now my stocks are bringing me in dividends. My crypto are bringing me in dividends. I'm owning houses that I don't live in. So I'm renting them out. That's bringing me in money each month. So you're telling me that a house that I live in is a liability? Yeah, because it's taking money from me. So we almost got to get to a point where we gotta get on the same level of language so everybody know what we're talking about. Because I can be in a meeting saying assets and liabilities, everybody's like, yeah, that's what I'm doing. Let's go out there and put a diamond in their head.
Yeah.
Put a $25 million diamond in their head.
Yeah,
and I'm not joking on anybody, but I'm like, okay, you know how many Bitcoin you could have bought for that?
yeah.
But to each his own. And I'm not here to joke on anybody, because to each his own. But I do think that if we can get on the same level of saying, okay, we're all wanting to move in the same direction, when we all want a system that we can all understand, we got to be speaking the same language. And like, if we all agree on this is what asset is and this right here is what liability are, is then when we're talking in these meetings, we can be all understanding the same information versus we're leaving the meeting and we're all going in different directions, but we all have the same meeting, you know?
Yeah.
Let me, I think Rudy, I think you actually mentioned about the cryptocurrency. So let me go to cryptocurrencies, because I never really covered it in here. So this section of the video, let's say if we did like many slices, we can actually slice this out. And this is, this is Yahoo. This thing is really annoying me. There it is. Okay, so we have this right here is called Coin Market Cap. And what CoinMarketCap does is it allows you to see, here it is, coinmarketcap.com. If y'all want to check out cryptos, this is it. CoinMarketCap.com, it allows you to see all of the cryptocurrencies. I mentioned there was 8,000, right? 8,000 plus on here. I'm not going to go over each and every 8,000, but see, there's 100 pages and there's 40. There's 100 crypto on one page, and there's who knows how many pages there actually are.
Man.
So yeah, so these are all the cryptocurrency projects. So starting right here, number one is Bitcoin. And the reason this is number one is because we're talking about market cap. So don't forget, when you're looking at cryptocurrencies, do not be fooled by the dollar price. Don't be fooled by this dollar price. This right here is a red herring. This is misleading. This is nothing. If you're looking at a stock and it says $100, look at the market cap. If you're looking at crypto and it says $100, look at the market cap. Right? Because why is that important? Because when you're buying, let's say some of the Bitcoin, you're buying an $8 billion currency, 8 billion. So if you think about how many actual shares or coins of that do I have compared to the total market cap, that's what you're looking at. Versus, let's say Ethereum right here, which is the number 2 spot, its price is $1,000, right? I mean, $1,700. Its market cap is 100 billion. Right? And the reason I say these are red herrings is because you have things like this. Check this out. This is one of my favorite crypto. It's called XRP. Since Eddie asked, XRP. If you click on the crypto, you can actually see a little bit of information about the crypto. It'll show you like a chart. It'll show you its price. It'll also show you its market capitalization. it will show you its supply, its actual, the total supply that it has right now. There are 45 billion tokens or coins on of XRP. So there's 45 billion of those. So that's another thing you probably want to be looking at is total supply. But like this right here is 20. Go ahead.
Oh, okay. No, go ahead. I have a question after this.
Okay. So this is 20, the market cap for XRP is 21 billion, right? But if you look at this is 50 cents. You'll say, hold on, this thing is cheap compared to, this thing right here is cheap compared to, let's say, Cardano, which is 90 cents. But if you look at Cardano, it's actually a $26 billion token. So if you actually buy some of these right here, XRP, you're actually getting more of this market cap than this right here. Or you're actually getting more of this right here, let's say Polkadot at $23, because look, his market cap is 20 billion. So if you buy $1,000 of this versus $1,000 of XRP, some people say, well, I'm getting more XRP because I have more tokens, not knowing that if you look at the market cap, you're actually getting more Polkadot. I would technically say because the market, you're getting more of that market cap. So does that make sense?
Yeah.
When we're talking about the market caps?
And maybe I can help out because I will say something that we've been watching, and I hear about this now that I've been in it for, and I want to say I'm new, and like 2 weeks, but I'm like a sponge. I love to absorb it. I mean, I'm on there 5, 6, 7 hours a day listening to people just get information, like this Dogecoin or Dogecoin. People are saying, oh, it could reach $100, it could reach 50, and what I've learned is just because of what you said, that is literally impossible for it to reach that part because there's no market cap. So for instance, I'm gonna let you take over and explain to people that are trying to rush into this. Can you show the market cap on Dogecoin and why it may not even reach $1 because there's no backbone to it?
Absolutely, man. I'm so glad you brought that up, Rudy. So here we go. Yeah, we're gonna go back in here. We're gonna check out Dogecoin. So where are we at? We were at
there it is, right
XRP
there.
right here, and here is Dogecoin right here in the 10th spot. So Dogecoin actually is at 7 cents, and people are like, oh, this right here is the next Bitcoin. But if you look at this market cap, it's 9 billion. That's roughly 9 billion, right? And if you look at Bitcoin, like this thing is the next Bitcoin. Bitcoin is basically, let's just say 900 billion, right? So Dogecoin is basically 1% of Bitcoin, right? So if you just times this right here by 100, you'll probably get Dogecoin at $70 with the same market, $72 a coin, a token, with the same market cap as Bitcoin. And people think, well, this is going to be the next Bitcoin. No, it's not. It can't be, because when you're looking at this circulating supply, which is what Rudy just said, this thing has, look at this, 128 billion tokens. 128 billion tokens that market cap has to go up versus Bitcoin, who has a total supply of, its max total supply of Bitcoin. Hold on, this is Tether, sorry.
Do I need to move the screens out the way?
Oh, no, I just need to move that panel. Oh, I guess I could actually technically move the panel. So when you go to Bitcoin, the max total supply is 21 million. You see, there is a thing called scarcity. That's what Rudy is basically saying. If you have less of something, it should technically, and it's scarce, it should technically be worth more than something over the long term that has a crazy amount of supply. 21 million isn't a lot when you compare it to 127 billion, right? Rudy, is that what you're basically?
Yes, I'm with you. I'm just absorbing everything you got.
Yeah,
teacher right now.
Because you're saying like you can't have all these, like Dogecoin is basically, to get to the same market cap as Bitcoin, the tokens will be worth $72 a coin, and do anybody really think Doge is going to be worth $1 trillion?
So,
Like worth like what?
so I've been following and listening, and I think so the Dogecoin, it's popular. Elon Musk, Snoop Dogg. I think I don't know. I get the name from Kiss. I might get that wrong, but they're all supporting it, and they think it could be something, but it can't really. It will not make $100 because if it made it to $100, it would literally be worth more than all the bitcoins put together, which is ridiculous.
Yeah.
So to leave it maybe around, it may make it to 50 cents, but it'd be a long-term thing. So I was just trying to see if you could explain to us that, when you start investing in some of these companies, there is a calculation to help you even decide if this is something you could look at, because you don't want to just, follow a trend, because that trend could be also leading you in the wrong path.
Right.
And you,
And that's why I was asking you earlier, Kevin, about the risk of dealing with cryptocurrency because of the risk. Whenever someone, like he just said, that if they tell you, oh, this is about to blow, this is about to blow, and you take $1,000 that you don't have to put on a coin that's not going to go nowhere, then, you just kind of wasted your family's money spending $1,000 on something that wasn't going to go nowhere. You know what I'm saying? So,
I mean, yeah, like Rudy was saying, we have I think the equation that I like to use is going to be the market cap. So I'm looking at the market cap. I'm saying, I don't care what this thing is trying to tell me what the price, like that's a red herring. This is only 7 cents. It doesn't matter. What matters is that when you're looking at the market cap. So if this market cap or total coin supply says this, then you know that it's probably not going to get to where everybody's saying. So with Doge, I mean, it may get up to 50 cent. And what would that be, like a 10x? So that means, I think that'll be like, what, $80 billion? That's still a lot. Because when you start comparing what an $80 billion company is, we're talking about some heavy hitting companies. We're talking about some really heavy hitting companies. So I don't really know if it'll actually get there. So I look at the market cap and I look at the total coins. And you can do all that right there on coin market cap. Also, whenever you're looking at those same things, when it comes to, let's say, stock, because I want to make sure that I cover stock too, there's a thing that you can actually look at on here. So let's go to, I was going to go to GameStop, but I really don't want to do that. So I'll go to Apple because they have a really good balance sheet. So when you're on this page, FinViz, you can do the exact same thing. You can say, okay, what is the market cap? The market cap is going to be $2 trillion, $2.2 trillion, right? Boom. And then that's crazy, right? And you look at all the innovation they have and what they're doing. And people think that Doge is going to be, what, half of this value? I don't think so.
no way.
But then you go right over here to shares outstanding. How many shares do they have? This is just like how many tokens do they have on the crypto side. They have 16 billion? So yeah, it looks like they have 16 billion tokens right there. So
140,000 billion. 30, yeah.
That is a lot of shares. So yeah, that's a whole lot of shares. But anyway, so so you can actually look at those shares, 16.9 billion. So if you want to look at that, that's how you get that. And if you want to look at this is how you get the market cap. When it comes to the actual what the company's making, look, they're selling $294 billion worth of sales. Their income is 60. I think what they're bringing in is basically 63 billion. So out of the 290 billion after taxes and everything else, paying employees, rent due and everything, they're actually netting this 63 billion. So you're like, hold on, this company's making 63 billion. This is a healthy company, right? Like, I mean, if you're making this much money, then the only how you can be actually an idiot about it is if you have a lot of debt. They have basically pretty much, I would say, low debt, low long-term debt, and then just low debt to equity. So this is a healthy company. When you're looking at stuff like that, you're like, okay, I'm looking for a healthy company. This is one. This thing right here makes sense. I'm going to buy Apple. Then they give a dividend. They have this many employees. Like this company is pretty good. So
Can I ask you about the dividends?
what are the dividends?
So for some people that don't know, and like I said, this is something I just learned about. I was into that today. Can you explain to people what dividends are, and if some companies do and some companies don't give dividends? And for me, I had a question actually after I was done kind of watching the videos. Do dividends actually matter if they're so low?
I would say that when it comes to the companies and dividends, some people have dividend investing portfolios. Other people have portfolios that may have a mixture. Like me, I have a portfolio that has like a mixture. It has dividends. Some companies don't. But what a dividend is if a company's making so much money, like let's say Apple, for example, again, this thing is making so much freaking money, and they're inventing. They have, their new Apple headquarters. They have all these new iPhones. They have everything. At one point in the company's history, when they're mature, like Apple, they have so much money that they technically don't have any place to put it. Like it's like it's just sitting there. It's like doing nothing. That's why you have companies buying Bitcoin. But we can get into that another day. When you just have money sitting around, that money is just like our money sitting around. It's not working. It's not making any money. Matter of fact, it's going down in value because of inflation. So what they normally do is they try to give their investors dividends. So at this point, Apple has a 0.61% dividend, and that's based on their price, their stock price. So their stock price is $135. They give 0.61 of that, I believe, a year. So if you look at that, I think it averaged out to about 82 cents per share or something like that. And over time, what a company tries to do is they try to increase that dividend as their share price goes up, because they're making more money. They necessarily can't do anything with that money. And, instead of just having cash on your balance sheet, because that's kind of stupid. Like if just having cash on your balance sheet, that's kind of stupid. So they'll try to give it away to their investors, which are going to be, you, me, and everybody else who invested in a company.
Right.
Nice little tax write-off.
And I think it's a tax write-off for them too. I think so.
That's a good deal. That's a good deal.
And a fun little fact about dividends. Like, let's say if I work 40 hours a week, 365, and I get paid, let's say $1 million a year, right? The government, we all know what taxes is, right? I think taxes at that level will be, oh my God, who knows, like 40%. But let's just say it's the regular 33%, like most people. So you're going to basically be, you're basically going to get $333,000 taken away from you for taxes. But if you get $1 million in dividends, it's taxed at 15%. So you'll only get $150,000 taken away. So somebody working for money, you get taxed more, versus somebody who gets passive income, you get taxed less. If y'all don't understand the way this whole system works, the tax code is set up to incentivize people to do certain things. They're basically punishing people who work, and they're saying if you invest, we're basically gonna give you a tax break. That's what I get out of it. Whenever I see things like that, I'm like, hold on. So you're gonna tax me less for just having my money work? Yeah, that's what the tax code is. That's exactly why we need to be investing and stop working. I'm telling you to stop working. Start investing. Not working, obviously, but in the long run, that's the goal.
Right. And like I said, and if you take this information now and you invest in this information, then, you're going to be good. Like that's why I wanted to have you give the people this information so that the people can then be able to use this information, for them in their future generations. Because once again, like Rudy said, he wished he would have got this information a long time ago. As I too say the same thing. So, but like I said, I definitely thank everybody for tuning into the show. We're probably going to wrap it up right now, guys. Once again, Kevin, thank you for doing the video for us today. Rudy, thank you for coming in, asking some good questions. Once again, family, thank y'all for joining into the show. Don't forget to go subscribe to All Weather Lifestyle. Peace.
That's right. Have a good
Peace.
one.